Here we have the hourly price chart for Super Micro Computer Incorporated, stock ticker SMCI. Here we can see that the stock, for the most part, kind of closed at roughly near the midpoint of its prior trading zone. The stock appears, in my opinion, to be having a bit of an identity crisis. I don't really think it knows what it wants to do at this point. I do think that the broader trajectory here, the balance of the evidence, I think favors the top side at this point, and I'll get into a couple of those reasons why. But there are some conflicting signals here that need to be watched. Because anybody that's familiar with this stock knows that the price history has been very erratic. We've seen periods of extreme highs and extreme lows. At some points, they're unpredictable. I've heard stories from many people about getting stopped out, kind of at strange levels, and then seeing the price reverse quite quickly. And they could have, if they just held the position a bit longer or moved the stop loss a bit, they could have captured gains where otherwise they had to wind up taking a loss. Even though they might have been mostly correct in the hypothesis that they were taking and the position that they were taking. Um, so this is a bit of a difficult stock to trade. I think it's an excellent company. They make products that there are not many companies in the world that can do what Super Microcomputer does. They're kind of uniquely positioned in the artificial intelligence world, as far as industrial applications for artificial intelligence. As opposed to something like to a company like AMD, or something like that, which would be much more focused on retail markets and budget gaming products and things like that. That's not to say that one is better than the other, or worse than the other or anything like that, but they're very different. Very different companies and very different products, and that does mean that there's definitely a place for both of these companies in this new world of artificial intelligence that we're kind of steamrolling into here at this point. But super microcomputer, the outlook is still terrific longer term. It's just that the stock itself can present some challenges for traders, and you really need to structure the position properly in order to not lose money and not get caught on the wrong side of a trade. So overall here, what we need to look at, we need to kind of balance the evidence here and look at the positives and the negatives, so that we can really kind of make some assessments about how trading scenarios should actually be structured here. So overall, I mean, the first thing that I would point to would be this gradual upsloping trend line here. It's in a bit of a strange location. I mean, if we pull out here a bit, we can see the broader price trend, which overall clearly is positive. We can also see that the stock started to take a massive run higher, um, this year. I mean, it's had a tremendous year, and we really are starting to kind of rocket higher here, after seeing, a long period of time where the stock was trading closer to roughly 270, 275. I've been a bull on this stock since it was trading at $35. So I've been, pretty familiar with this name for quite a while. But this year has just been, monumental as far as the share price explosion that we've seen, and that's why there's so much interest directed at this stock. But currently, we're kind of caught here a bit. Like we've seen these massive highs, well above $1,200 per share, and then we did need to see some of that given back. I mean, I think it's fair to acknowledge, this thing really took a rocket higher. You can't just go in one direction forever. You do need to see some corrective retracements. Some buyers need to close their positions and then re-enter at lower levels, and all of this is really what helps fuel longer term bull rallies. You want these things to happen to some extent, so that this is what allows the share price to move higher over time. So we did need to see a bit of a decline here. Ultimately, those lows fell to around 675 in value. So it's a massive difference. I mean, we're talking about well over, roughly $600, in share price value, where that would represent the declines here. And now we're kind of, I would say we're kind of stabilizing here at these lower levels, and not coincidentally, a lot of this activity is really happening right around the moving average cluster. And this is going to be important to watch here because, when we start to see some decisive breaks, and I would really be talking about the daily chart here. We're looking at the hourly chart at the moment. But we would really need to see some more decisive breaks on the daily chart in order to really get a sense of whether or not the uptrend is ready to resume, or if for some reason the market is going to start to try to take this stock lower. But as we can see at the moment, we're really kind of oscillating right around this moving average cluster. We can't seem to get very far away from it. And if you can see one example here, I've been pointing this out as a false breakout, because the most that we were able to kind of deviate from these exponential moving averages came during let's get an exact date here. This would be the June 20th trading period, where we did reach highs above $1,000. It came close to $1,015. Prices reversed very quickly. And I've been referring to this as a false breakout. I mean, that's why I've got this arrow here. Because we were forming an uptrend channel, as you can see. But prices broke through that bullish pattern fairly quickly after posting new highs. I mean, we broke a double top here previously. There was a double top at roughly 970. And that was a forceful break. I mean, the stock went all the way to 1015 and then quickly reversed lower, all the way to declines of, we reached roughly 775 in share prices. So we're talking, we're getting, this is like a $250 price swing very quickly after making a very strong new high, after posting a very strong rally. So these are the types of circumstances that you run into with this stock. It's not like trading a Microsoft, or an Eli Lilly, something like that, where the trend is just completely stable and doesn't really kind of deviate much. Or Johnson and Johnson would be another example of a stock like that, where you just kind of have this just kind of steady uptrend. Not a lot of unpredictable behavior, stuff like that. But at the same time, it's much harder to generate strong gains in a stock like that. I mean, you'll generate gains with those stocks, but it's going to take a much longer period of time. So, the SMCI is really a more adventurous, if you want to wade in the deep end of the pool, if you want to ski down Mount Everest kind of a thing, you want a little bit more adventure in your trading, then this would be an interesting choice. So, the way things currently stand overall, I am looking at this as still a positive development here, because, we're kind of consolidating here at upper levels after a very strong rally. And then even with this shorter term price structure here, we do have a series of higher highs that remains intact. And it does, we can see that prices are kind of trying to force their way forward. It's like a bird trying to break its way out of the egg when it's born. It's like this stock is trying to kind of break through here. It's having a little bit of difficulty, but as long as this underlying trend here remains positive, I would continue to trade the stock from the long side, and I would view dips as new buying opportunities. This can be confirmed in the hourly indicator reading, which is more positive than negative. There is some negative trend action here, as we can see, but that's shorter term in nature. The longer term trend here is still positive. So, overall, I would still view this stock as a bullish asset that would really be best valued as a buy on dips. So here's the current market analysis for Super Micro Computer Incorporated, stock ticker SMCI.